Hello everyone, happy Sunday. I was basically saying that this was a very bearish setup on the S&P 500 on the overall market. It would be very rare for us to break above this high, but overall I was saying this is a very bearish setup. And yeah, we're going to talk more about that. So in today's video, we're going to talk about the S&P 500, the NASDAQ, the Russell, the dollar, and the large tech stocks, which are the main reason why the moves to the upside and these moves to the downside happening. All right, so without further ado, let's get started with the video. So number one, I was saying 447 was a very major level on the market, and we ended up opening at 447.14 with a high at 447.48. And I was basically saying on Friday, 447, if we break below that, I would find it very difficult for us to be bullish again. So now in the short term, obviously, we came back and fell straight back to this 443.11, 38.2% fib, right? And the last time we were here, I was bullish because the overall tech stocks looked very, very bullish. But now, that's not really the case. Down here, Apple, all these other stocks were looking really, really strong and things were looking good. But now that's not the case, and it's a sort of a different environment with the tech stocks. And in the short term, yes, we could have baby bounces. Things can come back and get some sort of bullishness into Monday. Sure, blah, blah, blah. That's sort of irrelevant. But that's irrelevant because the momentum is bearish. And until, in my opinion, unless we break back above 447, 448 level, this is like a short the pops sort of market. Obviously, heading into Monday, there could be a big influx of buy pressure. Obviously, when you look at the day trades, when you look at the intraday charts, things sometimes do just continue climbing, etc., etc. They look very good. But overall, on a daily chart, this is a bearish setup. And one of the main reasons, the main reason that this sort of mood basically happened is a lot of weakness in the tech stocks. So when you look at the dollar, obviously the dollar did not show a ton of strength. And we usually look at the dollar as an inverse relationship to the market. It gives us an extra layer of movement for the market. So the dollar has an inverse relationship. If the dollar is strong, then that's obviously weak for the market. But we saw on Thursday, the dollar and the stock market moved up in unison. And Friday was a bit of a flat day. So that begs the question, what caused the market to fall? And it had a lot to do with these large tech stocks. So Apple was a big reason why, the market, Apple is just failing to break above this key level of resistance. We saw Meta, big, strong weakness out of Meta. Tesla, not so much. Tesla was holding up, but again, this is not really a very bullish setup on Tesla. Microsoft, bearishness. Google, not so much, but then Amazon, bearishness. Netflix, bearishness. So there's a lot of bearishness. Nvidia, AMD, bearishness, right? A lack of strength. So when these large movers that have held the market up, they're starting to show some weakness now. That's obviously not good for the market. So in my opinion, we are in a bearish sort of environment until we break back above 448. Maybe we could get a break above. In the short term, we could get a break above. Things can start getting a little choppy here, for sure. Things can definitely start getting a little choppy here, especially since Wednesday we have the FOMC meeting and Fed rate and all of that good stuff on Wednesday. So that can cause some choppiness this week, 100%. So it's tough to really be extremely bullish down here at 443 like we were before, because right now the tech stocks are showing weakness. But as we get close to this very, very important 437.69 to 439 level, which is the 23.6% fib, then we can start being a little bit more bullish. But yeah, definitely that 447 level was money. So now, unless we get a break back above 447, 448, it's going to be tough. A similar situation when you look at the NASDAQ. This is just not really a bullish setup. And the IWM didn't really move too much. It's still holding above support, but the IWM hasn't been the reason why the market's moving. But now what is interesting is when you look at the VIX. So the VIX, when you look at the MACD indicator, the MACD is pointed lower here on the VIX, which is showing bearishness. This is bearish on the VIX when the blue line is pointed down like this, and the VIX has an inverse relationship to the market. So if the VIX is going to be falling, then the overall market should be rising. But this, on Friday, we had a big pop on the VIX, regardless of how bearishness the MACD looked. So that's really, really interesting to me. And yeah, honestly, we're just going to have to take this one step at a time. We're going to have to continue looking at the large tech stocks. We're going to have to look at the large tech stocks as a whole. All right, so we're going to first need to see if these large tech stocks can start getting very overextended to the downside. Once they become very, very overextended to the downside, then once they get into better buying opportunities on the large tech stocks, then it would be easier to be more bullish on the market. But until then, it's not really that safe to swing long. But, day trading is different. But swinging long, it would be difficult until we get some sort of buying opportunity out of the large tech stock. And, with that being said, I hope this makes sense. This was, we didn't really need to go too much into detail about everything. But yeah, we're just going to see how this week fares. And, it's going to be pretty fun. I hope you guys had a wonderful weekend. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.